In this video, I'm talking about 4 things that may help maximize 401k savings in 2021. Hey everybody, it's Matthew Jackson here from 401k Maneuver, where we provide online professional account management with the goals in mind of supercharging your 401k account performance. Stop leaving money on the table each and every year in the form of lost returns. Let us help you. If you're new here, be sure to hit the subscribe button, and the links to everything that I mentioned in this video you can find in the description box below. So let's jump right in. You know, with pensions disappearing and the future of Social Security unknown, American workers are now largely responsible for their retirement savings. For many employees, a 401k is their largest asset come retirement. Yet, too many of us set up their 401k, contribute each paycheck, and do little else with it. Contrary to popular belief, growing your 401k savings is not a set it and forget it strategy. With a little bit of time and effort, it's easy to shorten the learning curve and take control of your financial future. So keep watching for 4 things that may help maximize your 401k savings next year. First, have a retirement plan in place. Let's say you're driving from Cincinnati to Phoenix. Sure, you can get in the car and you can drive southwest, but without a map showing you the most direct route, chances are you're going to end up somewhere other than where you originally had intended. And the same applies to your retirement. You need to know where you are and where you want to go in order to achieve your retirement goals. Otherwise, you run the risk of not really having enough money saved. And who wants that? So think about this. If you had almost $200,000 average balance at retirement age, and you were making $60,000 per year at your job when you retire, how long are those funds going to last you in retirement? Think about it. Will this give you the retirement you truly desire? For most, the answer is going to be not even close. Take time today to create a plan for retirement. If you have created a plan years ago but haven't followed it, then create a plan right now based upon where you're at right now. Get clear on when you will retire and how much you'll need for the lifestyle that you actually dream about. From there, take a look at how much you've already saved and figure out what you need to do to get back on track. If you need help creating a retirement plan, we recommend seeking out third-party help as soon as possible. In fact, doing so sooner rather than later may have a significant impact on your retirement lifestyle. Here's why. A recent Morningstar report shows that participants who received expert guidance had as much as 40% more income during retirement versus those who receive no help at all. So use our calculator at 401kmaneuver.com/calculator to see how professional account management may improve your 401k account performance. You may be amazed. Before you reach out to a third-party expert, check out our guide that explains the different types of financial advisor licenses and how they may affect the advice that you get. Number 2, engage with your 401k savings. Have you ever found yourself thinking, I thought my company took care of my 401k for me and I don't need to do anything? This belief, whether it's concerning your current or past employer, is all too common among 401k investors. And it's one that's disconnecting investors just like you from your money and potentially keeping you from maximizing your 401k savings. Don't do that. While you might think you have better things to worry about than managing your 401k, we encourage you to think again. Because if you aren't engaged with your 401k, no one else will be. It's up to you, it's up to us to make sure we have enough money for retirement. Yet, far too many people don't understand what they're investing in. And others don't know how to read a statement when it comes in the mail. Or a lot of people don't even bother to look at it. There are some people who think their employer takes care of their 401k for them, which is not the case. Let me repeat, your employer cannot take care of your 401k for you. If you really want to stay on track to potentially maximize 401k savings, we encourage you to become engaged with your investments. When you gain the necessary knowledge, you may go from being a disconnected investor to one who's engaged with your 401k savings and the overall health and well-being of your financial future. Here are a few ways you can enhance your 401k savings knowledge. First, watch our 401k masterclass videos. In as little as 30 minutes, you may discover 3 strategies that might supercharge your 401k account performance. Second, open your 401k statements when they arrive. Third, ask your plan provider questions if you're unclear about your 401k investments. Check out this article, 5 questions to ask a 401k plan provider sooner rather than later. Next, learn how to read and understand a 401k statement and watch our video on YouTube, How to Understand Your 401k Statement. If you're still watching, please hit the like button and make sure you subscribe to our channel and hit the little bell to the right to receive notifications of our next posted content. Third, plan to save more next year. Another way to stay on track to potentially maximize 401k savings is to contribute more in 2021. Employee 401k contribution limits are $19,500 for 2021. This applies to 401ks, 401as, 403bs, most 457 plans, and the federal government's thrift savings plan. For those age 50 and older, the 401k catch-up contribution limit is $6,500 in 2021. If maximizing the contribution limit seems unreasonable, it's okay. Time and consistency build wealth. Doing what you can today to save a little bit more each month may help you more in the long run than you think. So here's a few ways to maximize 401k savings. Contribute 1 to 5% more each pay period. Review how much you've been contributing to your 401k or your other workplace retirement accounts. Now, see if you can put in an additional 1, 3, or 5%. And if you can go higher, do it. Increase contribution amounts when you get a raise. If you've recently received a raise or expect one in the next year, make sure you increase your contribution amount. Meet the company match. Contribute at least the minimum of what your company will match because it's basically free money to you. And depending on what your company matches, it may double the amount of what you already are saving. So let's say your company matched 100% of your contribution, up to 6% of your pay. With a $55,000 salary, you could put in 6% or $3,300 for the year, and your company would match this at 100%. That's another $3,300 per year of free money that's yours to keep. This extra $3,300 doesn't include the compounding of returns over time. This is just about the additional money you could be saving with your employer match. Contribute more when you receive cash gifts or a tax refund. If you get a tax refund or a large cash gift, put all of it or part of it towards your 401k savings. We recommend you contact your human resources department and tell them the amount that you'd like to invest, and they will take it out of your paycheck or paychecks. Then use the tax refund or gift money to live on and make up the difference during that time. Number 4, regularly rebalance your 401k. This tip to maximizing 401k savings doesn't require you to come up with more money. It's as simple as rebalancing your account quarterly. Rebalancing is the process of realigning the weightings of your assets or your investments in your portfolio. This can involve periodically buying and or selling some of your assets in the portfolio in order to maintain the initial desired level of asset allocation. And let me give you an example. This would need to happen if maintaining a certain percentage amount of stocks and bonds was your desired goal. If over time the stocks outperformed the bonds, a person may need to sell off some of the profits created by stocks to buy more bonds so the portfolio maintains the desired balance. Therefore, a rebalancing of your portfolio may need to take place from time to time throughout the year. And if you aren't rebalancing your 401k account allocations throughout the year, you may be missing out on earning more and keeping more of your hard-earned retirement savings, because unmanaged account allocations may experience much larger losses in down markets and may miss the opportunity for growth during good markets, and you don't want that. Have questions or concerns about your 401k account performance? Click below to book a complimentary 15-minute strategy session with one of our folks today.